welcome everybody. Thanks for taking the time to be here. My name's James Bradshaw. I cover banking for the Globe and Mail. I'm going to be the moderator for the next panel, and I think we've got a nice little dovetail here for those of you who were in the room for the last panel listening to the Canadian banks talk about modernization. We've now got a different perspective from some of the senior executives at some of the largest global banks who you can see on the screen behind me. I think it's going to be really interesting to talk about this, especially given some of the cross-border elements that came up in the last panel, and I'm looking forward to it a lot. We will keep, all being well, a little bit of time at the end for questions, so please do think about that, keep that in mind. I think the way we'll do it is if you can stand up and kind of shout it out loud, I'll repeat the question for the room to make sure everybody heard it, but it'll be easier than trying to run a mic around in what is a fairly large room. But do please think about it, because I'm sure some of you will think of really good and pertinent questions that I will not. So I'm going to start just by running down the line here, and we'll have everybody introduce themselves briefly, just so you know a little bit more about your panelists, and then we'll dive right in. Sean, do you want to start us off?
Good afternoon. Sean Goldrick, Wells Fargo. I am responsible for the treasury management products and services for Canada. So that means payments, receivables, liquidity management, deposits, et cetera. I've been at the company going on 8 years or so, and prior to that, I spent some time with Morgan Stanley during the credit crisis. It was a lot of fun, which made me want to come back to commercial banking. And then before that, time with ABN AMRO Bank.
Hey, Sean. I'm John Landry. I'm the head of Treasury and Trade Solutions for Citibank in Canada. I've been here for 9 years, with Citi for 19 years. And prior to Citi, with GE Capital and with Wachovia in the U.S.
Jude Leclerc, so head of product for, oh my God. Head of product for global liquidity and cash management. Been in Canada for about 18 months, just a little over that. Prior to that, I was working in England and in London with HSBC as well, also in global liquidity and cash management. And prior to that, I spent about just under a decade with Payments Canada as well. So have seen it both from a commercial space and from a regulator space.
Thanks, Jude. And Matthew Parker-Jones. I'm the head of Treasury Services for JP Morgan Chase in Canada. And I guess similar to Jude, I've kind of bounced around different sides, but I've only been with JP Morgan about a year. And I spent quite a bit of time in management consulting, actually advising and working most recently with Accenture on some of the modernization stuff, which is one of the reasons many of us are here. And then before that, I was a banker at TD Bank, actually. So kind of boomeranged back to my banking roots. So pleasure to be here today.
Okay, great. Thank you. So we'll dive down into some of the details and the weeds of this in a moment, but I'm going to start with a question that may seem like a really simple question, but may not have one simple answer, which is just why are we modernizing? You know, what is driving this? What's the impetus for the change? And I'm going to just start in the middle of the heart of the panel with John Landry, and we'll try and make this a bit of a conversation. We'll go from there.
Great, thanks. So if anyone was in the last session, I think someone up here said that we all know why we're modernizing, but I know I've been in the room more than one time, and I think I've been in the room while you guys have been there when this has happened, where in the heat of the moment, you know, someone senior representing a bank or a technology organization will say, "Hey, I'm out. Like, I'm too frustrated. You know, you guys, this is not going in the direction that we'd like." And it always comes back again. But I think in that kind of context, there's a couple of things that I think about when that brings the urgency to modernization in Canada. And I think one of the good points of many that was made in the prior session was, you know, it's not just about technology, it's about risk tolerance, it's about our rules, it's around evolving thoughtfulness around the ecosystems that are working here in Canada and other places. But in the end, I think about it kind of from three ways. The first, from clients. Right, so clients, you know, the point was made earlier that we've got a lot of things to be proud of in Canada, and that's absolutely true. I believe that, and we should be proud. But from my perspective, our clients, whether you're a Canadian headquartered company doing business in 20, 50, 90 other countries, or you're a client headquartered somewhere else and doing business in 20, 40, 60 other countries, and Canada is amongst one of those, they're naturally going to cherry pick the best of what they see in markets elsewhere, and they're going to expect that everywhere where they go. So when they see, you know, the ability to do wild and wacky things like, instant payments with full reconciliation data and the things at a very low cost, and they then apply that same kind of lens to every market. They do the same thing here in Canada. So there is that expectation from clients that they want to see that very best in Canada that they see sometimes completely in other markets or bits and pieces in other markets. Second is obsolescence. And I think this one's a pretty easy one to understand, but it applies to technology, but also to rules and risk tolerance. So, some of our systems are newer than others. Some of them are decades old, architected decades old, the rules put around them decades old. And I don't mean to minimize, and I'm not minimizing the effort that goes in continually to make those things better and looking for incremental improvement. But there's certainly an element of obsolescence in terms of keeping some of our major systems intact and running and performing and able to deal with the volume and the interoperability that we've come to expect of them. And the last is regulators. So, our regulators have changing and evolving risk tolerances, changing and evolving expectations around competitive pressures and openness and access to the market. And so, the decisions that come out of our own regulators or other central bankers around, being the lender of last resort, around, as I said, access, also pushes us, and it should, right? There's some markets that have very proactive regulators that have excellent outcomes, really interesting outcomes in the financial, in the payment space. And there's others that have taken an opposite approach, a very laissez-faire, hands-off, and also have really excellent and really interesting results. So we need to be mindful around that.
I think that point about obsolescence is really important. And like you think of our two national payment systems, LVTS, which was built in the late 90s, ACSS well before that in the 80s. Like they were built for a different era, like a different period, an analog world, like where paper was the dominant payment form. And we can layer as much as we want on top of that infrastructure, but we're really never going to get it to the point that we can do all the things we want to do in this digital world. Our payments infrastructure was never envisioned to support things like ride sharing, right, and the immediacy that requires for payment. It was never kind of envisioned for companies like the Amazons of the world with complex supply chains, right, fully digital operating models. So we need to evolve our core infrastructure to support that. None of our clients, and I know that all four of us will agree on this, is none of our clients wake up saying, hey, I want to make an AFT payment, right? Or I want to make a wire today. Like no, they have a business to run. They want to make a payment and they want to do it quickly, painlessly. They want to know what's happening to it. And then they want to move on and run their businesses. We have forced them, because of the way our payment systems are set up in that very analog manner, we have kind of forced them to learn our rules instead of how it should be working, which is I want to do a payment, and I choose the terms and so forth. Mm-hmm. We can't move to that model until we modernize the infrastructure. And we can layer and layer and layer, but eventually, right, we'll run out of options. So it's important, these periods, to kind of take a pause and redo the foundation, right, so that we can carry it forward for another 20, 30 years to support all of these changes. And to your point earlier, large global corporates have a choice of where they put their foreign direct investment, right? There's so many countries vying to be tech hubs and FinTech hubs and so forth. If we don't have that infrastructure in Canada, that is like a knock against us when global corporates are looking to invest into Canada, right? So we want, as Canadians and as Canada, we want to have the best possible national infrastructure from a payment standpoint to attract foreign investors and attract foreign corporates. So it's an important thing for Canada as a whole's economic competitiveness.
I would add to that, although the global corporate perspective is very important, the needs of the domestic small business, mid-market enterprise business are just as important as well. They too will be doing business abroad. They will be exposed to other ways of doing things, and they are going to want that here. Matthew and I were on a panel just last week, and we were talking about virtual accounts. And Matthew talked about a large, can I say the name? No. A very large company, a very large company, multi-industry, multi-country business, requiring virtual accounts. And he walked through that business case, and I said, you know, at HSBC we have a small client, it's a bread company. They too needed virtual accounts. Their problem, they won't come to you and say, I need enhanced remittance data or I need standardization. No one uses those words unless they're a bank or potentially a clearing system. They came to us and they said, I've got lots of stores and some of my stores are within the radius of one branch, and as a result, they're all depositing and withdrawing funds from the one account, and I can't tell what store deposits and withdraws funds from that account. Mm-hmm. Can you help us with that? And in a world pre-modernization, pre-digitization, pre-virtual accounts, the answer to that would have been, well, open 3 different accounts for each store. But with products like virtual accounts, when you dabble in that world, you're able to say, right, no, you don't need to do that. Work with the one account, and what we can do is we can create virtual accounts for you. We can create. You don't have to go through the extra cost of extra accounts. You don't have to go through the extra cost of KYC. You're working off the one account, but we can work it in such a way that we're giving you all the data that you require off of the one account. And just for kicks, we're going to give you a hell of a lot more than the data you've asked for regarding these deposits and these withdrawals. We can give you, you're supplying all these restaurants, we can give you data around that. We can give you data around which tills in your stores are creating these payments or these withdrawals. So you're able to now make much bigger decisions. The payments data allowed you to do payments decision, but it now allows you to do so much more. One of my tills is always closed. It's never making, I never gather any money from there. Is that the best real estate in my store? Or should I be changing that real estate? And that's the payments data allowing you to know so much more about your business, not just payments, about all sorts of other business decisions. So the global corporate certainly pushes us in such a way that we make decisions and we make investments, because we know we'll have a large client that will allow us in some ways to return our investment. But those solutions are good for large clients and small clients alike, domestic and global.
Yeah, so to kind of bring that home, the way, and again, a lot of us in the room sit on different components or committees or working groups related to this effort, and we all know it's no small effort, but one of the things that I find really encouraging, regardless of how big it is the fundamental thing we're trying to solve is adding value. And we all use the word value. How do we add value to Canadians or end users, whether they're a corporate or an individual or whatnot? I totally geek out on this stuff. And I've grown a beard over it, and it's going to continue to grow. And I'm from the States, guys, and this is when everyone talks about this being transformational once in a lifetime, I'm like, I need to become Canadian. This is awesome. So I talk to my wife about this, and I say, this is what's going on, and she's like, she says, who cares unless, like, I can use it, or a Canadian can use it, or an individual wants to use it. And that's the key thing is, how do we add value? And value isn't just presenting something, it's adding value by incenting or making you interested to use it. And I think that's the thing where we talk about overlay. That's what overlay means. And that's where, at the end of the day, when this is all done, we're providing an underlying infrastructure that we can actually truly bring things up 30, 40 years to set ourselves so we can hook into and do overlays and truly compete, whether it be the big five or us as large global financial institutions. And I think that's where we're playing nice in the sandbox, and we really are. And I think it's hard. It's hard work. We all have disagreements, but I think it's transformational and important for Canada. And I love the last thing, and I'll be quiet. I love the comment about. I think Carolyn said something about candor, right? About I can't remember exactly how she put it, but it's the one thing that I've learned is that you guys are so nice. Like you Canadians are so nice, and what's really happening is there are really hard conversations that have to be had, and they're really starting to happen in a conscientious, respectful way, and that to me is that's the difference maker in making this happen, is that collaboration, but willing to have those hard conversations.
That's great. So that brings up an interesting point, because if there's sort of a refrain I'm hearing so far on day one of this summit, it's that clients are demanding the change, right? And as you said, what you want to do is create value. But we also know how quickly, once a new technology gets introduced, it starts to seem like table stakes. So how are consumers and your customers, the customers of your banks, going to notice the difference in what's being introduced through payments modernization, both what's happening here and what has already happened in the US? Because there are interesting examples in the consumer and peer-to-peer space around the introduction of Zelle and Venmo and similar technologies that we don't have here. So I'd be interested to know, how are consumers really going to sort of feel and notice and value the changes that are coming down the pipes?
Go ahead. Well, interestingly enough, you got to look at it as an ecosystem. So you've got the endpoints, which is financial institutions, the accounts that clients use. That's really what a client sees every day. He sees his accounts. He doesn't see the stuff in the middle. The stuff in the middle is the piece that financial institutions and/or clearing systems deal with. But you can only do so much on the ends. You can have, very modern, data-rich, virtual or digitized solutions over here. But you can only build so much if the piece in the middle has not been modernized. So, some people have heard me say this before. EFT is an extremely, or EFT or AFT is an extremely popular payment method in Canada. It's the #1 payment method in Canada. But if you ever spend any time looking at that payment and what that looks like, every single one of those fields, there's not one single field that allows for more than 30 alphanumeric characters. For many companies, that doesn't even allow you the space to put the name of a company in there, right? And this is how we build on top of that as financial institutions. We'll build receivable management systems, or we'll build other types of layers in order to bring that data in. But you'll always be limited by what happens in the middle. And so the more that we can bring that up, the more then we can enhance the solutions that actually the customers see every day.
I think building on that point, Jude, it's like it needs to be productized, right? And I've just made up a word, productized.
That's a great word.
But you can't just build a rail and say, build it, they will come, all right? And build a technology thing and build it, they will come. And I think that approach of just dropping products or dropping rails, right, gets you only so far. Maybe you'll get some traction, right, because of inertia, et cetera. But you need to package them up into solutions. Clients are looking increasingly not for a point-to-point product solution. They're not coming to you saying, I want you to do wires for me, or I want you to do electronic payments, or I want you to do lockbox for me. They want an end-to-end solution. They want it customized to them. So I think, James, to your point around how do you add value with that, I think the winners in the future are the ones who are able to take that, package it up into something that's meaningful for their customer, right? And create something really unique out of those assets that they have. And I think as you have this fragmentation that's happening in payment types, more and more wallets, more and more payment channels, that need for that consultative approach, that need for banks to be partners and to come to the table with solutions is increasingly valued, because there's a desire on the corporate side for a partner who can help sift through the various options and help recommend a product offering that's right for that particular corporate. So I think the winners in the future are those who are able to do that successfully and invest in the capabilities and the people in particular from a talent side who are capable of thinking that way and thinking holistically around the needs of the customer.
So I'll echo again that the fact that Canada's in a really unique position of strength by the fact that that there's a smaller financial institution framework or network. People have been talking about leading in the cards, right? I am personally embarrassed that I had to come in. I didn't have chip and pin for years, right? And I had to swipe, and I had people at every coffee shop going, "What are you doing?" And now we have chip and pin, and now it's tap, and then it's just like I'm sorry, I can't help you with that. And then the other fact too is that you've had e-transfer for what, 15 years or so, and then the press is all coming about Zelle, right? And Zelle's still on the comparison side. We're still gaining traction. But the problem with the Zelle's a wonderful, wonderful vehicle for the states. But the challenge for the states is you have 24 really big banks. Not all of them have necessarily. Not Zelle, but RTP. But Zelle, you have 200 banks that are a part of it, and some actually have it in their apps, and some don't. So adoption and usership's gaining traction as well. But the point being is, it's much bigger and more complicated. So the pole position that's here in this country is some of the fine examples that you've already brought to market years ahead of your largest trading partner. And like that to me is like the opportunity in what was stated about will the U.S. listen. I think it's pivoted and should be make U.S. listen, right? Like how many? Like I'm curious, how many people travel to the States who are Canadian? Like, okay, all right. How many make payments in the States? Okay, so how many have assets in the States? Okay, smaller. Wouldn't it be nice to have, if you have a bank account in the States, to pay up and down into Canada in real time? Would that be nice? Would you use a consumer like that? No, I don't hear it. Yes, no, yes,
That
yes.
one over there did.
Yes, I know her. That's why she's clapping. I paid her. That's the opportunity. It's like, don't wait for the States. We can't get our stuff in order for. I won't even go there. So don't wait for us. This is the opportunity.
This is not being broadcast in the States.
No, it's not. No, but it's a personal opinion. But anyway, so no, but that's the opportunity is because it's there's so much brain power in this room alone, and that's what makes me excited about the. Yeah.
That's great.
If I could,
Yeah.
it's some excellent points there. I think I'd like to go back for a moment to Matthew and Jude's kind of thread a little bit, and I don't know if it came out as explicitly as I'll say, but my bank, Citi, doesn't have a retail presence or ambition in Canada, right? We are a corporate commercial bank, and that's where we'll be, and that's where we're strong. So I find myself sometimes in conversations in various forums around, so where should our energy be, and who is the customer that we're trying to satisfy? And I think at times there's been a pendulum swing between, we focused on the retail end customer, peer-to-peer, the real individual, and sometimes the pendulum will swing to the corporate side and even the international side. And I think the conversations sometimes need to kind of come to the middle there. That's a really interesting dynamic. From my perspective, while I don't have retail customers, all of my customers have retail customers or their customers down the chain. So for me, I find a lot of the interest and energy and opportunity in getting data exchange and reconciliation and the things that are important to the initiators of the gross transaction before it kind of scatters down into retail goods and services and exchange. That's where I find a lot of my energy and interest.
Yeah, and just before we move on from this topic, one of the other things that I think sometimes gets overlooked, we talk a lot about P2P and consumer payments, and we talk about businesses moving money through large value transfers and so on, but there's also the sort of B2C, the business to consumer aspect of this. And Sean, we've talked about this a little bit before. Do you want to just give us an example or two of sort of the potential, the opportunity you see in the B2C space as we sort of go down this road?
Yeah, I think, in the States, where we're working on a real-time payments rail and request to pay, separate from kind of your Zelle space. There's some unique opportunities that have popped up, both in the actual payment itself and also tied to credit cards. So for example, how do you take kind of clunky, somewhat manual, riskier type transactions, Jax, out of the system a little bit? And one of the things that's being worked on, and it might be in production, I'm not entirely sure, is doing insurance claims, push to card it's called, paying it to the debit card. So if you have if I'm a, let's call it State Farm or Allstate, whatever, if I have a policy with and I have a claim and it gets paid out, they can actually pay it directly against my debit card or credit card if they have it on file. Now it would be a credit to my credit card, but it's more applicable to my debit card because that hits my bank account. They still don't have my bank account information, but it's another way of actually trying to look at B2C transactions and automate them more. It's not necessarily against a payment rail per se, but it's another avenue of way people are thinking of how do we think differently about automation, and not just strictly in the infrastructure space, but there's some offshoots that really can line up really nicely. One that's more practical is emergency payroll, right? So if you have a real-time rail, There's use cases of technically B2C payments for making payroll payments, and they all happen. I mean, if there's emergency payroll, what do you send today? You send a wire, exactly. So it's a wire. How do you it's not exactly the cheapest way of doing things, and it's a little bit harder if you're the recipient to understand a little bit more about the payment, and does your bank actually take a fee for processing and posting that payment? So there's these other little variables, and there's a laundry list of things, but those are two practical examples where you could have unintended value.
Well, I think on the B2C side, it's really interesting. Like that whole idea of kind of how to use Interact bulk disbursement, or how to use Zelle, right, to create an experience. Like on the JP Morgan side, we do that today. The fires in California, right? We used Zelle to basically push out payments for some of our clients to basically get it to them faster, to get it into their accounts, right? So using that infrastructure to do a B2C type of transaction. But the next step, in my mind, is how do we now use the infrastructure we currently have to start getting rid of checks, which continue to account for a really disproportionate amount of volume on the B2C side, right? And oftentimes, we are managing kind of large check print operations, right? And we've got, on the other side of the wall, we've got the routing information for Zelle. So it's about using the assets increasingly as a bank behind the scenes to marry those logical pairings. So if we can route a transaction that's historically being done by check, but we know that the recipient can receive it by email, or by Zelle, or by e-transfer, how do we use those assets behind the scenes to start driving the digitization of checks? And that's where we're really going to start hitting our stride as banks, providing more value to our customers, where we're not putting it on our corporate customers to do that work, to do that matching and do that client reach out, but instead approaching our clients with a solution that lets them eliminate their check volume while getting their payments to their customer faster and delighting their customer. Because really that's what the end state is. It's like, how do you create a better customer experience by using those assets? So in this case, using a lockbox or a check print and a Zelle or an e-transfer, combining that, but then creating a really neat solution for a customer that has like real impact on the dollars and cents side and a real impact from a customer experience standpoint. And I think that's where things are headed on the B2C side. It's about the combination of assets more and more to create unique customer experiences and outcomes.
That's great. So Sean brought up something interesting in just the cross-border aspect of this. And I was saying in a separate session I did this morning that we tend to talk about these things in sort of jurisdictional terms. What's Canada doing? What's the US or the UK or Mexico doing? But increasingly, these are cross-border businesses, cross-border banks, and I think customers are recognizing borders less and less and less. So I'd love to come at this issue from a couple of different angles, and I'm wondering, what are the international standards that will be most important in terms of drawing different jurisdictions together? What are the barriers that are still getting in the way of that maybe need to start to be broken down? And just are we paying enough attention to making these systems internationally compatible when we build them, so that we're not going to have to come back and re-engineer them to make that work in future?
So, sorry, did you want?
No,
Just kind of shortly, briefly, a couple things come to mind. Firstly, I consider it part of our job and other internationally focused banks to come to the table with Payments Canada, with the Canadian Bankers Association, with the other players in the market, to balance that discussion. There will be naturally that tension around, we got to get it right here in market. There is, our regulator looking over our shoulder here. There's our customers sitting across the till from us. And so there's that driver around the here and now, the immediate, the short-term win sometimes. And that's really, our participation, whether it's these kind of forums or it's on those committees, is kind of part of our responsibility. I think, that's a part of it. Interestingly, very shortly, I think data is an important part of it, but I think it's actually the last and least important piece of it. I think, a big part of Citi's business is bridging that gap between in various international markets, Canada and the rest of the world. So, in some senses, that's in our favor to see those gaps. But on the other hand, we also see it's important from our clients' perspective, as mentioned earlier, to break some of those down. And sometimes we jump to data, and we jump to ISO standards, and I think those are, to your first question, some of the common ground that we can build on, and that can get us some results in the near term. But I think it's more about the people and what happens in the room, and that there's balanced decision making and balanced voices in the room when we're setting our priorities.
So, although I agree with that, to a certain extent, the standardization of data is so important. Because if we look at some of the networks globally that have done really well, whether we're talking about SWIFT, MasterCard, Visa, like those are big global networks, and a big part of their success is that they are the same everywhere you go, right? That standard looks the same. If you are hooking into MasterCard here in Canada, if you're doing it in Australia, if you're doing it in Brazil, it looks the same, and that payment from a standardization perspective looks the same. SWIFT has that same quality to it, is that there's a reason SWIFT has been so successful at maintaining that international position for large value payments. It's because it is consistent in all countries. So as we look to develop our national, more domestic payment systems, we can't forget the fact that actually we are now in a much more globalized world, and although we need to meet the needs of our Canadians, the needs of the Canadian consumers, Canadian regulators, Canadian banks, there is also a piece of that is if you're not going to be building in such a way that you're interoperable with your neighbors and with your biggest trading partners and looking at some of the best practices in other countries, and ISO is going to be part of that. You can't really get away from that now. ISO has such a prominence that it's difficult to not have that at least be a topic for discussion when we're talking about clearing rails. You are, in one way, you're not going in the same direction as most of your big jurisdictional partners. So to not at least thinking about that, I'm not saying we have to do it, but to not be thinking about it seriously and not have that be front and center of the discussion when we talk about cross-border payments and we talk about modernizing our systems, it's a miss on our part. It's not an accident that it's been so front and center for Europe, so front and center in the US, so front and center in so many countries that have looked to modernize their systems. It's because when you look at SWIFT's experience, you look at MasterCard, Visa, et cetera's experience, that standardization of data has been a pillar of their success.
I think, and it pains me as a Canadian to remind myself of this sometimes, but we're 35, 36 million people in Canada, right? And sometimes we absolutely, punch above our weight in many things around the world, especially in financial services. But we need to be thoughtful of the fact that, again, we're 35, 36 million people. Should we really have our own version of ISO? Yeah. Right? Probably not. Should we really have fragment multiple different payment systems for 36 million people when the U.S. has one or two, right? And they're struggling with fragmentation, and they're 10 times our size. They're not fun things to reflect on, but they're important considerations as we talk about infrastructure. We can't afford to create ourselves an island, right? And it's important for us, particularly as trade and as globalization is erasing barriers. And that's not just on the large corporate side. That's all the way down to everybody in this room who travel on vacation internationally in many cases, as Canadians do, or maybe snowbirds going down to Florida or Arizona in the winter. The world is more and more global. Canada is a very multicultural and global country by its nature. We need to build that connective tissue and ensure that connective tissue, right, is there in our financial services system, in our financial system, to other markets. So that's really, really important. We need to reality check ourselves sometimes that we kind of peek outside. Obviously, we're trying to be intraoperable before becoming interoperable, but we have to poke our head up every once in a while, make sure that we're not building in a direction that's different from everybody else, because otherwise we're going to wake up 5 years from now with infrastructure that's Canadian different, right? Which is not, in this case, not a good thing, as we talk about innovation and being competitive as a country.
And we hear it all the time from our customers. I'm in Brazil, I'm in France, I'm in Australia, I'm in the UK, and this is the standard that I have to, and this is the code that I need to put into my ERP system. And then because I'm sending a payment to Canada, this is the other code I need to load into my ERP system. And because now I know that I'm going to be doing business in Brazil, this is the other code I need to load into my ERP system, and so on and so on. And so for us, it's great as financial institutions to be dealing with one thing because, hey, I invest once and I get to to have lots of benefit out of that. But it's not just us. Our customers have those exact same needs. They do not want to have 63 different versions of code so that they can interact in all of these different jurisdictions, understand all the different standards, and then just, for kicks, understand the cutoff times for the clearings, cutoff times of the banks for the various payments that we provide, and all of that needs to be coded. And that, if you can simplify that for a customer, what you're doing is you're reducing their cost. You're allowing them to repurpose their staff into better, more value-add things. You're allowing them to have access to their working capital more quickly, potentially have better credit positions. So this is what we see it as standardization. We see it as remittance data. I'm a bit of a data junkie. I know I am. But my customer doesn't care about that. What they care about is how much they can reduce their costs, how much they can repurpose staff, how much they can do, have access to working capital. That's what they care about. But the means to get there is through that standardization and through that common data.
I'm going to take the bait a little bit because I had a little bit of a different perspective, and I think maybe it was I would articulate it a little bit differently. I don't disagree that getting the data right is absolutely important. I guess where my emphasis there was, yes, we shouldn't have our own Canadian standard ISO XML. We should, the data standards are things that we don't need to have unique, in my opinion. But I think the hard work is actually around brokering the rules and brokering the mindset of interoperability and how we're going to function in a global economy across these borders. The data piece is hard and important, but it's I think there's other things that will get in our way faster. And as long as we still have, people on stage here saying, Canada's very unique, well, my opinion is we actually have a lot more in common with other markets than we do differently. And I think sometimes we let, whether it's Canadian exceptionalism, every country has their own version of it, believing that we're that much different, that we need to think about that and be really open to learning and working and borrowing from other markets and being open to them.
So that's actually a great point. Let's talk just briefly about brokering the rules. So how are we going to do that? Who's going to lead the way in terms of brokering those rules? And when we get to something like, I'm sort of leading into talking about data and data-rich payments and everything that comes with that, how are we going to broker the standards for how that data will be handled and who will be able to touch it and who will be able to see it and what's a legitimate use of it and what constitutes consent from a consumer, et cetera, et cetera, et cetera. How are we all going to get to a point of agreement where we understand what's on the right side of the line when we get there?
Well, let me start with that and my colleagues can follow. I don't think as a bank that's kind of my role to do that, right? That is the realm of our regulators, our policymakers, and the Department of Finance in Canada has been actively engaged on that, whether that be through their retail payments oversight effort or various efforts that they've done in consultations that they've conducted the last several years. And Payments Canada has certainly been effective at piling on through their own consultations. I think as a global bank, where I can be helpful in the conversation, where we try to be helpful as JP Morgan is we're in 80 plus different markets around the world. And we've got people who've seen different vantage points and different challenges in different situations. And to John's earlier point, many cases, like we tend to think of this is a very unique Canadian situation. If you take a step back, actually it's very similar to Australia. It's very similar to what's happening in Europe or Latin America. And what we are in a position to do as global banks is basically to tap into that network, right, and share that expertise. And I think that's where we can really contribute to the process is as we do consultations, and I know that all of these banks on the stage right now, we've been very active in that through the Canadian Bankers Association, through Payments Canada, through various consultation initiatives to ensure that we are providing and sharing input from our respective jurisdictions where appropriate, right, to provide just a different perspective. Things like ISO is a prime example of an area where we are able to tap into people who are live with ISO. We are real-time payments. We can tap into people who are running real-time payment systems and bring that expertise here. So I think that's really where us as global banks participating in the market really can provide value to the ecosystem more broadly. And that's really kind of our role is to kind of bring that expertise externally to support and provide a perspective as Canada and from the policy side works its way through that process.
Building on Matthew's comments, at the end of the day, we have to implement the result, right? If the result is X from a regulator, we need to implement that. And generally speaking, I can't speak for the other banks, but generally speaking, when you think about global regulations, like things like privacy, which is really, I think, what you were hinting at, is you look at what's the most, the most, I don't know what the right word is, but the one that has the toughest standards, I don't know if that's the right word, but that you have to adhere to around the globe. And you stick your flag in the ground and say, that's the one I'm adhere to. So that way, with every other market, I'm on sides. And then you say, okay, well, how do I transform my business or use my business around payments modernization to actually comply with whatever that standard is? And I think what we're going to end up getting to, and this is not just Canada, I think this is in general with dealing with privacy globally, is we're going to get to moments, right? We talk about like value in the moment, the value we offer in the moment. I think privacy in the moment, right? If this particular transaction needs to pass this kind of data, are you comfortable with that? And it's not really a simple answer to it, but we're all used to, like, I sign one acceptance of services kind of thing on my app, and that basically says, I've absolved whomever from whatever, right? I mean, but I think it's going to become much more finely tuned over time. It's going to have to be, if we start thinking about things like AI and data lakes and dealing with data and how we're going to manage data, it's going to have to be very, very clear to the underlying, especially the consumer, what we're doing with that data in the moment.
Yeah.
So, I mean, one of your original questions was whose responsibility is it to define these rules? And I philosophically believe it's all of us in the room here. And I acknowledge and appreciate the role of the regulator, and I think that's a very important one. And there are times when I wish ours was made a different decision on particular items, but you said we're going to have to live with the outcome. And so for that reason, I feel very strongly that not just the GSIBs or the DSIBs, I think it's a collective responsibility for us to speak up loudly about the things and understand the issues very carefully so that we come with an informed decision. And if we are coming with that mindset and that information and that focus and that approach, then I find it very hard to think that a regulator would think you're crazy and do something entirely different. So it's also part of our responsibility to both listen and influence our regulators in a helpful way. So I really feel like I feel that in my core that we have to do this, and that's the right thing.
Okay, great. My intent on the comment was really not to say that we're just going to sit back and let it happen, but we'll certainly. No, my beard will get longer.
So before we get to some questions, let's talk a bit about data, because Jude, you brought up the desire to break through the dreaded 30-character limit, and I want to talk first about just the opportunities. What can we, practically speaking, do with richer data that is going to transform the way payments are done and the transparency within that system?
So, I talked about virtual accounts earlier. We're doing a lot of other things. There's virtual cards out there. Obviously, you've heard all the gentlemen here talk a lot about real-time payments, which the key to that, although real-time suggests the faster piece, and that may or may not be attractive. I think most clients would say things move pretty fast today. The real key to real-time payments is the data piece that would come with it, and the opportunity to really develop the enhanced remittance data for those clients using that payment form. But if I look, and one thing we didn't talk about yet, if I look at HSBC and the various markets it's in, and I look at the UK, and one of the big things that's impacting HSBC right now in terms of modernization is the open banking side of things. I think that it's very difficult to talk about modernization of payment systems and not address open banking, because that is such a large piece that is changing how we look at banking. So PSD2 came into play in early 2018, and in the UK in particular, in addition to the principles of PSD2 Payment Services Directive 2, there is the CMA 9, Competitive Market Authority 9. So PSD2 were the principles, and then the CMA 9 were the very specific standards by which in the UK you needed to collectively do open banking. And 9 was because they handpicked 9 large domestic banks in the UK and said, you shall open bank. And HSBC was one of those. And the idea was, and I think you alluded to earlier, was that our consumers and our clients have the right to their data. We are sharing all this data as financial institution, as you exchange payments. There's a lot of data that exchanges hands. But at the end of the day, we don't own that data. Our consumers and our clients own their data. And should they want access to that data, they should have it. And as a result, because of the regulator, we developed an open banking solution in the UK. So we're a year on from that today, and experiences that we've learned is lots of consumers, lots of clients interested in open data, open payments, if I can call it like that. The open payments piece of open banking is still a challenge. So if I'm a client, I want to be able to see, here's my account at HSBC, here are all the terms and conditions of that account, here's all the pricing. How does that compare to a similar account at every other financial institution out there? And am I getting the best deal here at HSBC, or can somebody give me a better deal somewhere else? Or for a loan, for a credit card, etc. So we've seen a lot of pickup for that. Yes, I want you to tell me more, tell me more. What we've seen less pickup for is allow a third party to come in, dip into my account, and make payments on my behalf. There is still a very high level of trust that the bank should be doing that particular piece of the puzzle. But the open data piece, which is allow a third party to come in and look at my data and provide them data that's coming from my bank, that we've seen a ramp up in the access to that. But the payment piece, not quite so much. And the reason I mention that is because when we talk about modernization, we're always the other party that hasn't really been mentioned today is the third-party service providers. We do think of fintechs and paytechs as, oh, it's the us versus them. That actually hasn't been the experience. I've been working in product for a long time, and I've been looking at it from various jurisdictions for HSBC. And what I see is partnerships. I actually don't see the us versus them. Even if you take a very, very mature product like Wholesale Lockbox, all financial institutions use a third party to help them deliver to that service. When you take some of the very modern things we're doing, like virtual accounts, we are partnering with fintechs to allow us to provide those kinds of services. Fintechs are fantastic in the sense that they can develop technology at a pace that we as financial institutions, due to our structures, just can't quite get there fast enough. On the other hand, what we provide fintechs as financial institutions is we provide them a national, a regional, or a global footprint that they would not have access to without us. And I heard this morning during one of the talks this morning, they were talking about financial institutions are on the receiving end of millions of calls from customers every single year. That is millions of calls of information coming from your customers about what should drive the next best thing or what is the need of the customers. That is information that is held at a financial institution that, again, is of great interest to fintechs, and we can do a lot with those partnerships. So we haven't really touched on that before, but I just thought that is one key area when we talk about modernization is the open banking piece, open data piece, and partnerships with those third-party service providers.
I can take a different tack on that. I think regardless of whether it's regulator-led or market-led open banking, there's clearly a demand for more data. But kind of going back to my productize word that I made up earlier, because I'm just going to use it now. I think it's not just enough to say, hey, here's data, right? Or here's a real-time rail. Right? That doesn't solve a customer outcome, right? It needs to be, the data you have to actually use the data to do something meaningful for the customer, whether that be make it more, like provide an experience that's more straight through processing by providing in a meaningful way that ERP systems can digest it more cleanly. Providing kind of an analytics overlay, right, that lets the customer better understand their clientele and when they receive payments to optimize their treasury functions. Or using that data to better optimize fraud, right, or to share data in such a way that helps identify malicious actors in the ecosystem, right? Like, and I think the challenge is, I think oftentimes we get pulled into the conversation around the technical solution, which is how do I build this, right? What are the gears and the widgets that I need to actually make the data work or make the real-time rail work or make any of that infrastructure work? And it's important to a comment that was made at the beginning of the conversation, which is at the end of the day, somebody has to use this, right? And for this to work, somebody has to want it, somebody has to use it, and it has to have adoption, right? So challenging ourselves to say, having more data in and of itself is not an outcome, right? An outcome is what we do with it over and above. And I think that's where it's important as we have these conversations to think about what is the end goal, what are we trying to achieve, and to anchor around something meaningful. Because I think that's what clarifies a lot of these conversations. Some of the hard trade-offs that we're navigating as an industry right now, like that's kind of the North Star that lets us navigate some of those decisions and lets us expedite things as we move through that.
So building on this, and I know everyone to my left has their own kind of gateways and partnerships, and we all know each other well enough to know that we have FinTech partnerships and we have different sandboxes that we're all doing internally. One practical example of that is taking a data lake, which is basically, in essence, keeping all the data you get, and then be able to use some AI, artificial intelligence, to mine that data on certain circumstances that add value in the moment. One of the things that and I apologize, this is a little bit of a morbid comment, but that we're working with our 70 million consumers in the States is when a family member calls and says, the account holder's passed away, I need to figure out how to take ownership of that account. We're working on AI to actually, one, try to authenticate that relationship, which is really not easy, guys. It's really hard, as well as give the banker the right Q&A, not only to authenticate, but then the right Q&A based upon the data we have across multiple systems for that consumer to understand the questions to ask. Not bereavement type questions, but really how do I get and focus on the customer and use AI that I can get a dashboard of what to ask, when to ask, and then try to get that person to the right place so that we can get the right paperwork so that they can take over that account in a really difficult situation. So, albeit not the most smiley of examples, but that's a practical example and unique one where I would have never thought of that. But it's partnerships that I know everyone to the left has similar type moments that they're working on within their own shops. But it's things you would never think of, and you're not necessarily get them without some level of partnership with non-banks.
I could keep on asking questions all day, but I want to give the audience a chance to ask a couple of questions with the time we have left. Is there anybody who'd like to throw one out? And if so, please raise your hand, and you can shout it out, and I'll repeat it. All right, then you're stuck with me.
If it was that good.
Let's just talk about, just to pull together kind of the open banking piece and the FinTech piece with data. So if we've got a situation where there are more third-party providers coming in partnering, there are more data lakes and more data being analyzed. But as Jude pointed out, this is data that properly neither the banks nor the FinTechs nor anyone else involved in these ecosystems other than the customers actually owns. How do we get to a point where we are making our customers, our clients, confident that their data is being used responsibly, that it's being used only in the ways they intended it, in a world where, as Sean pointed out, user license agreements where you click I accept on 78 pages of 8-point text are not all that informative. How do we get to that privacy point from where we are right now?
I can start. Again, I can speak for what Wells Fargo is doing, and it's a tough question to answer. It's a tough nut to crack. So like any large banks, we have multiple verticals, and the different verticals have different systems, and different systems have different data, right? And depending on what you do, you may have. Sorry, I'm about to geek out here, so I'll stop there. But basically, you have a lot of data, and what we've done is actually taken a horizontal and there's a data governance function across the bank. So number one, it's setting standards within the bank's four walls that how you manage, how you safeguard and how you use the data. So I think that's number one, is like making sure you have the right controls in place for the data you already have. The second part of that data governance function is really to understand what do we want to do in relation to development and looking at opportunities, value in the moment, and things like that. And the nice thing is, no matter what part of the business is actually looking to develop or bring something to the table, they're working against the same set of standards. Then the third part of that, or third leg of the stool, is really then trying to make sure we apply the right lens around privacy and making sure the customer, whether it's a consumer or corporate small business or what, understands what that means in the moment that they're in a transaction and what data is going to be kept or passed or whatnot. So that's an example of what we're trying to do.
From a data privacy standpoint, I think my pragmatic take on it is, despite every bank on the panel here, and I think just about every organization in the audience at one time or another has had controversial things in their history, banks in this environment still have a competitive advantage in terms of the trust that we have in the past. In some cases, we need to re-earn or continue to build upon. And so the way I think about it in a practical way is, we have a number of hundreds, thousands of really interesting FinTech potential partners, potential competitors, and I think that while I don't know the answer as to how do we reinforce that at all times with our prospects, that when we think about the future and what value banks can provide and what our role is in the ecosystem, that earned integrity and trust is something that we can bring to the table, along with the real creative thinking that others in the marketplace bring around us.
I think that role, the word I like to think of is stewardship. Like, as banks, we are stewards of our clients' data. And to John's point, there is an earned kind of privilege that we have to be that steward that that banks have earned over many, many years and continue to earn by investments into cybersecurity. I know for our institution, we spend almost $1 billion a year on cybersecurity. With a B, that's a lot of money on cybersecurity. So we earn back that right. I know the banks on this panel spend that same level on cybersecurity every year as well, right? So we continue to earn that. To Jude's earlier point around partnership, oftentimes it's positioned as it's fintechs versus banks, even particularly on things around open banking and data. And I really think that, and perhaps that was the case, or that was the perception a couple of years ago, but I think more and more it's fintechs and banks. And many fintechs actually don't want to own the data because there's liability that comes along with that. And we as banks are actually in a position where if we partner thoughtfully with people who share the same values of stewardship and responsibility with that client's information, we can do really, really powerful things, providing the best of our capabilities, which is that stewardship role, and our abilities in cybersecurity and privacy, with the capabilities of fintech, which is moving quickly, doing exciting things, and really bringing that expertise on the customer experience side. So it's more and more it's additive than anything, and I think banks really bring some strengths at the table from a data side that make it really exciting to be partners with banks if you're a fintech.
Thanks, Matt. Jude, do you want a last word or quick last word?
Well, for me, I think about the journey for a financial institution to make that data available. So I know there's a lot of people in this room that work in a financial institution or have worked in a financial institution, and you know how hard it is just within your own financial institution to get access to your own data. Can you imagine trying to make that available to the outside parties? I mean, so the build for that, the levels of orchestration that need to be put in place, the investment for that is such that we don't take those partnerships lightly. We do make very sound decisions in the partners that we partner with because in order to do anything that would be in a data share environment, a financial institution has to, all of us have those green screens, I know we do. So in order to bring that up from green screen technology, in order to make all the cool things happen that we do today, it's a lot of investment. And that investment means you are going to make very sound decisions in your partners.
Okay, great. Well, we're out of time, but I want to thank the panelists for their candor and for the call to action for Canada to be part of, I think, a bigger picture of payments modernization. And if any of you do have questions that we didn't get to, there's only one way out here, so I'm sure you can pick them off on the way to the door. Thanks for your attention. Appreciate it. Have a good day.